Hello guys, this is your boy Ali Solanki and today we'll be talking about trading and investing. Which one is better for you? In this video, I'll tell you exactly through which you can earn more money and which one of the two should you choose. Watch this video till the end as I'll be talking about this topic in detail with facts and my personal experience as well. Also, remember there are people who have done well both in investing as well as in the trading domain. So, let's find out which one is better for you. First, let's understand the difference between trading and investing in the stock market. Investing and trading are two very different approaches of wealth creation or generating profits in the stock market. Let's understand the difference using a simple example. Let's say you buy a piece of land and right after you buy it, its price just shoots up. Maybe because of the news of a new airport or a new road that is going to be constructed right next to it. The buyers are therefore willing to pay you even twice the amount of money. Now you can opt for selling that piece of land to generate quick profits, which then will be called as trading. However, if you decide to hold on to the piece of land thinking that its worth will be way more in the future, then it is known as investing. In the investing approach, regardless of what the buyer has to offer, you hold on to the piece of land to sell it in the future. Similarly, while trading in the stock market, you put your money in a stock based on how it has been performing in the short term and do not go and look into the company's financial details or even look about the company's business model. In trading, you heavily depend on the technical analysis of the charts, what's happening in the news, the different strategies and indicators that help you determine the short term price of a stock. This in turn helps you predict the price of a stock in the near future. However, while investing for the long term, you need to look at the company's financial details, look at how it has been performing for the last few years or even more, learn more about the business model of the company, and research about the company in detail. But once you pick a good company, you can then relax for the next few years till the time you decide to sell it. The small ups and downs in the stock market do not have an impact while investing in the long term. Now that we've understood the basic difference between trading and investing, let's have a deeper dive into this. First, let's talk about the risk involving trading and investing. Trading always has a higher risk than investing. However, the returns from trading are also quite higher than investing. Trading can double your money in just a few days, while it can also make your balance go zero at the same time. However, investing in the long term is always quite safer and less riskier. If you're a person who wants to invest one time and never look at the stock prices again, then investing is just for you. The returns might be low, but if you've chosen a good company, in the long run, you will always have positive returns. However, this is not the case in trading. In trading, you always need to be conscious about what the stock prices are at the current moment. You need to know about what's happening in the market, and all of this you should know before anyone else so that you can take the most benefit out of it. The next thing that I would like to talk about is buying stocks based on tips. If you're buying a stock just because someone else told you that it will generate profits and you did not even pay attention to the company's financials or even pay attention to its charts, then you're essentially trading with your eyes closed. This is rather known as speculating than trading. You are choosing a stock based on someone else's tips rather than researching about the company yourself. And this goes well with both the investor and the trader. No matter what, do not depend on someone else's tips. Rather, research about the company yourself first, especially when the tips are coming from a broker or a news channel. There are various fishy scams behind it. One of them is the pump and dump method. In this method, a broker who already has a lot of stocks of a small company will tell you to buy that stock, promising a great future ahead. As many people will start buying this stock, the stock prices will slowly start to go up. at which point the broker will sell all of his stocks at this new high price, leading to a decrease in the demand of the stocks, and the stock prices will come crashing down. This will result in losing of all the money that you have invested in. So to put it simply, do not invest based on someone else's tips. Now let's talk about how to select stocks. A trader and an investor have very different approaches when it comes to selecting a particular stock. A trader might spend a few minutes or maybe a couple of hours before deciding that he should buy a stock or not. Whereas an investor needs to spend days or even months before selecting a particular stock. An investor looks at the financials of the company, gets to know the company in detail. He spends days understanding the inner workings of the company. He starts getting acquainted with its business model and also treats the stock as an agreement of ownership. This process of looking through the financials, going through the balance sheet, and looking at the profits takes a very long time, after which the investor can finally gauge the value of the company. And as soon as he thinks that the company is undervalued, he invests in it and lets it grow. A trader, on the other hand, needs to learn about the technical analysis part. He needs to learn how to read a chart. Reading chart is a skill in itself altogether. If you want to become a trader, you need to learn the art of risk management. Risk management is a topic in itself, but the main idea of risk management is calculating the risk and the reward and choosing a strategy based on your calculations. Before buying a stock, you already have decided at which price you will sell it at. For an example, let's say you buy a stock for 100 bucks. You must already decide at what price you will sell it at. So let's say if the stock prices go up, you decide to sell it at 110 bucks. Whereas if the stock prices move down, you decide to sell it at 95 bucks. Now this 95 price mark is known as the stop loss, which essentially stops any further loss that you might incur because of the stock prices going down. Now as you can see, you are taking a risk of losing 5 bucks as compared to the rewards, that is 10 bucks. Now risk management has a lot more things attached to this, but this is just a general idea. Apart from this, you must be very good at handling your emotions as well. Emotions can govern your decisions and can make you lose all of your money while trading. What I mean by this is, let's take the previous example. If your emotions would have conquered over you, you wouldn't have sold your stocks even when the prices would have reached 95 bucks. Instead of taking a loss of 5 bucks, you would have waited for the prices to go up again, which would result in you facing a bigger loss altogether. That is why only those who can handle their losses and their emotions can do well in trading. Along with this, many traders stress the importance of being updated with the current news before anyone else. This is because news affects the stock prices to a large extent, especially when it comes to short-term investments or trading. Let's look at this by using an example. Reliance has been in the news lately because of the various investments that it is getting. This has taken the stock prices of Reliance up in a recession like this. The amazing recovery by Reliance has been only possible because of the surrounding news relating to it. So traders need to be well updated with the news in the market, and that too before anyone else, so that they can take the most benefit out of it. Now what should you choose and what is better for you, trading or investing? To answer this, I will talk about my personal experience as being an intraday trader, swing trader and an investor as well. I personally started my journey in the stock market as a trader itself. I have been reading about the various strategies, intraday trading techniques, and the indicators to up my game in the trading world. Does it get better by learning about these skills and methods? Yes, absolutely, it does get better. But I would still consider starting out my journey in the stock market as a trader a big mistake. Now, I personally am of the opinion that when you start your journey in the stock market, you should only start it by investing in the long term and not even think about trading. However, if you want to get the experience of a trader, you should only keep a chunk of your money that you can afford to lose for trading. Also, before starting out your journey as a trader, do read about the various strategies involved around intraday trading and swing trading, and also read about the various technical analysis methods and chart reading methods that can help you out through this journey. First, master these skills by using paper trading or virtual money, and then only trade with real money. Investing, on the other hand, is quite safer and takes a lot less skill as compared to trading. But the returns and rewards from investing are also quite lower than that from trading. Most people lose their money in the stock market because they are impatient or trade based on their emotions and not the strategies or logic. Now, I'm not saying that investing is better than trading or vice versa, but it really depends on who you are as a person and what you're comfortable with to decide if you can become an investor or a trader. I'm planning on coming out with more such investment related and personal finance related videos, so please do subscribe to my channel, press the bell icon, like this video and share this video as much as you can. Also, if you're a millennial or someone who likes self-help channels or self-growth channels, then do check out my channel as it has a lot of videos about it.